be great to understand why you feel the ad tech industry is a great industry to invest in.
Advertising has now reached $1 trillion globally. It's a huge market, and as I'm sure all of the audience know, over the last 4 or 5 years, going through a lot of change and disruption due to privacy, due to exciting new channels like CTV and retail media, and then of course AI disrupting quite a lot of previously manual workflow tasks. So we see it as a huge industry going through a lot of disruption.
This episode was recorded on 3rd of March 2025 before the announcement of Liberation Day tariffs. Hello and welcome to the AdTech Heroes podcast. In today's episode, we're going to talk about investing in AdTech. I'm delighted to be joined by Rich Ashton, who's a managing partner at FirstParty Capital. Hi Rich, how's it going?
Hi there, Al. Great to see you. I'm doing very well, thank you. How are you?
Really good, thank you. I'm really good. Really excited about this episode. I think I've tried to get it in, for a little while now. You guys have started your own podcast since. I think it's such a topical subject. Will pique a lot of interest, I think, with our audience base. But yeah, really, really glad we got to fit the time in to speak to you today.
Thanks. Yeah, look, we look forward to joining for a while. I know we have been talking about it for a little while. And then, as you say, we launched our own podcast focused on the financial side of ad tech about 3 months ago. But it's, great to be here and looking forward to today's conversation.
Amazing. So let's start from the beginning. So why and how did you get into ad tech?
Well, as with everybody, not necessarily on purpose, but in 2016, I joined a financing company called FastPay, which was headquartered in LA. I joined in the UK office as the second European hire, and we were basically financing ad tech and digital media companies, normally helping for the painfully slow agency payment terms. So we were working with companies like Captify, LoopMe, Augury, Mobcoy, Agilike, a bunch of other companies that I'm sure the audience will be familiar with, typically selling into the big holdcos, typically getting paid 90 to 180 days later, but obviously having to pay their Google or AppNexus bill or their publishers much faster than that. So really providing working capital finance to a bunch of ad tech and digital media companies. I did that for about 4 years. I was in a similar role at a mobile app financing business for about a year. And then in 2020, joined forces with Kevin Flood and Kieran O'Kane to set up FirstParty Capital.
Amazing. And why do you think ad tech's a great industry to invest in your current role? Obviously, you're speaking to different investors, you're talking to potential clients as well. So it'd be great to understand why you feel the ad tech industry is a great industry to invest in.
Yeah, look, it's an interesting one and something that we're also always trying to communicate to our investors, or more likely prospective investors. So, advertising has now reached $1 trillion globally. So it's undeniably a massive market. Roughly 70 to 75% of that is digital. You could argue that 50, 60% of that is then the big walled garden platforms. But still, we're talking about hundreds of billions of dollars every year of, digital ad spend that is outside of those major walled gardens. So, it's a huge market. And as I'm sure all of the audience know, over the last 4 or 5 years, going through a lot of change and disruption due to privacy, due to exciting new channels like CTV and retail media. And then, of course, AI disrupting quite a lot of previously manual workflow tasks. So, we see it as a huge industry going through a lot of disruption. However, for us, strangely, the broader investor community is not that bullish on it, or maybe finds it too complicated, or we're not exactly sure yet. We're still trying to find out. But, there's definitely a lack of focus or appetite from the broader VC community. And for us, that's both an opportunity and a challenge. Certainly in terms of early stage deal flow, we've never lost a deal, which is unusual for a venture capital firm. Sometimes or often there'll be a competing term sheet and you don't win all the deals. But, for us, every time we've wanted to invest in a company, we've been able to do that. And, despite the size of the industry, there's only 5 firms focused on the sector globally. There's FirstParty and Imperium that are very early stage focused, and then Black Sheep, Progress, and S4S more at the Series A, Series B stage. So, the kind of industry insiders really get it. But I'd say at the moment, the broader, VC community is not that focused on it.
Okay, that makes sense. And then who are FirstParty Capital? What's their role?
Yeah, so look, we basically set up FirstParty Capital about 4 years ago as the almost industry insiders, investment firm. So, we're backing obviously ad tech entrepreneurs, but most of our investors are also ad tech entrepreneurs, senior execs from media agencies, from ad tech companies. And so, unlike a more traditional venture firm where the money is the main value add, we certainly hope that the main value add, in addition to the actual capital, is this network of hundreds and hundreds of investors that we have globally. I think we're up to about 240 investors now. Apart from my parents, about 239 of those are actual ad tech entrepreneurs or media executives. So we feel that, it's this kind of industry insider approach that should hopefully allow us to not only source the best deal flow, make the best investments, but then also meaningfully help these companies as they scale on a whole different range of business sort of outcomes. It could be, around product roadmap, marketing, go-to-market expansion. There's a whole, host of ways we can help. But we really look to be that, very early stage, hands-on value-add investor.
And you mentioned there's 249 investors. Are they certain levels within the ad tech industry? Are they certain profiles that you've targeted, or just organically that have been interested in investing with FirstParty Capital?
Yeah, great question. It's quite a broad range, to be honest with you. On one end, we've got, the founders of some very big companies, sort of unicorn founders who are obviously able to invest, reasonable chunks of cash. We've actually got some corporate investors now as well, which is exciting. So most recently, Double Verify invested in our fund, which is great. And certainly that's an area we'll be looking to double down on in terms of those kind of corporate strategic investors. And then also, there's an interesting profile around very senior media agency executives that have been maybe working in that sort of space for 30 years, now thinking about the next phase of their career, going into more of a kind of consulting, advising, board member, angel investor kind of role. And so we're able to, help some of those folks not only access, investment opportunities, but also think about the next phase of their career in terms of getting closer to kind of ad tech startups and advisory roles. So it's been great to meet some very senior people there on the media agency side. And then the broadest sort of range of, let's say, sort of mid-level people, but it could be more junior or more senior, is, people working in ad tech and media that are probably earning, a six-figure salary, but they haven't yet had a big exit. They're not at all full-time or professional angel investors. In many cases, this has been their first private market investment. And so at the low end, we operate a deal-by-deal angel syndicate in addition to the main fund. And there people can usually get started with an investment as low as $5,000. Which is, very different to a typical fund structure where normally, you need to be able to invest, much, much more than that. And, often as a kind of full-time thing or as an angel investor going around and meeting hundreds of startups. So, the money is obviously important, but for us, the access to the network and, helping people in the industry benefit from its kind of collective success is also super important.
And how many of those investors are UK based? Are they a majority UK based, or they're spread around?
Yeah, probably about half. So UK is definitely where our largest investor base is. The next biggest market is probably the US. We've probably got about 60 investors there. And then we've got quite big hubs in Singapore and Tokyo as well. But I think at the latest count, we've got investors in about 23 countries, including, Bangladesh and China. So it is quite broad.
Wow. And in terms of the companies that you're investing in, how do you really target them, and what kind of analysis is done when you're looking at them?
Yeah, so our deal flow pipeline is interesting and comes largely through the network. So as I mentioned, with 200 plus people in market, ad media companies, ad agencies, in ad tech partnerships roles, we do get a lot of warm introductions from our network, which is great. And obviously that's already a sort of big tick in the box in terms of that initial assessment, people that we know and trust bringing us interesting opportunities that they might be already working with commercially. Or even, exited founders that are coming towards the end of an earnout and thinking about their next project. And we're speaking with them sometimes, before the company's even launched. And that's really exciting. We love being involved in those pre-company formation ideas. So that's something that increasingly we're getting involved with. Obviously, Kieron is also a co-owner and co-founder of ExchangeWire. And ExchangeWire is obviously helping a lot of companies with its marketing. So they get to see a lot of interesting companies coming through the ExchangeWire channel as well. And then I suppose we're also starting to incubate some of our own companies through a venture studio as well. So quite a few different sourcing channels. Obviously, we get a lot of cold inbound, either from email or LinkedIn. On average, that doesn't tend to be as good a fit or as good quality. However, we have invested in some companies that have got in touch out of the blue. And then, in terms of the analysis, I'll try and keep it relatively brief because obviously we could do a whole podcast probably on performing due diligence, but there's 3 or 4 main areas that we're looking at. So from my side of things, it's more around the financial plans and the business model. Kieran will be mainly looking at the competitive analysis, what's going to be really unique, how you're going to sell it into the agencies or the publishers. And then Kevin's predominantly digging into the product and the technology. He obviously comes from an AdTech founder background himself. So between the 3 of us, we're usually covering most of the bases. From time to time, we will also then call in some of our investors to help on specific areas of due diligence if they've got a real sort of category expertise.
Well, and going back to the point of ad tech as an industry to invest in, you mentioned also that there's people with different backgrounds, different seniority levels within the industry that are interested in investing in ad tech. Like, what other options do these investors have, and are they coming to you and asking you, what's the difference between, or what's the added benefit of investing in first party capital versus investing in the stocks and shares ISA that I have, or the other financial products that are available in the market, maybe more so to the public. So explain that dynamic a little bit for me, please.
Yeah, sure thing. Obviously, this should not be construed as financial advice, just more my sort of personal opinions and a summary of the conversations I have with our investors. I'd say by the time that we are having a conversation with someone about potentially investing, they're probably at a point in their life and their career and their wealth where they have, stocks and shares, ISA, or the equivalent wherever they live, and understanding generally of the stock market at a fairly sort of high level. Potentially, they've also done some buy-to-let properties and or other sort of investing, crypto, I guess, more and more these days. But I think, people should think about it as a risk spectrum. So obviously, you've got your kind of longer term, less volatile, more stable, let's say sort of FTSE 100 or S&P 500 type stocks and shares. That should be a bit more of a probably set and forget strategy, just building up kind of long-term wealth. And then there's obviously various other things people could look at, but we would be at the higher risk in your end of the spectrum. Obviously, there's a bunch of stuff we do to hopefully de-risk those actual investments. But clearly, a lot of the companies we're investing in are still, pre-revenue, very early stage, high risk, high reward, but with a kind of 10, 20, 100x outcome versus a generally sort of 6-7% kind of return. So I'd say, people are probably only allocating, I hope, a relatively small amount of their kind of investable assets into first-party capital. But it's important to obviously get that kind of risk spread right of the kind of lower risk, lower reward, and then a certain part of people's investing budget for things that are more likely to generate a significant return. I think for, a lot of people in the industry as well, though, let's say the ones that are a bit more sophisticated or maybe already invested in some venture capital and private equity funds and done a lot of angel investing. One of the things that is a bit differentiated about us is that it's not just the financial return. I mean, clearly that's table stakes, but there's also a lot of networking and career opportunities that come with being part of the fund and the community. And also it's the only really way, or there's only a handful of funds globally that give them access to the sector that they know really well, versus potentially investing in a generalist fund, which is obviously going to be investing in a whole bunch of different industries where that individual then doesn't really have an ability to actually make an impact and kind of help their own investment.
No, that makes sense. And I think it's important to have a varied approach as well, right? So you've probably got some, like you said, investors investing in real estate, in the FTSE 100, whatever it might be, crypto as well. And I think this could be just another strategy for them, right? For their long-term future. When it comes to M&A, how do you think 2024 was? And is there are there any examples where you feel like there were some really standout kind of areas or standout acquisitions in your mind?
So I think, we started 2024 full of optimism, but I would say the first 6 months or so, apart from that live ramp Habu deal, I can't remember much of sort of interest. And I think the market was a bit slower for the first half of 2024 than we'd hoped or we'd expected. And then it felt like from sort of from June onwards to the end of the year, the kind of train had really left the station, and there was a whole bunch of deals. I guess most notably the Teads Outbrain acquisition, which obviously closed very recently, but was announced in the second half of last year. So, that was obviously a $1 billion transaction, which was great to see. There was obviously quite a lot of activity in the CTV space. Mediaocean has been very active. So, yeah, for us, it's been very exciting to see the return to M&A after obviously a few fairly slow years. But I think there's been a lot of pent-up demand. People have wanted to do deals, but there's been a lot of uncertainty. Interest rates have been high. And I think people have just been kind of waiting to see what's going to happen with the latest, obviously, US administration. And I think, since that election, there's obviously, again, been a new flurry of deals. So hopefully we're in a pretty good place for 2025. I think another thing to think about there, and I know you guys are PE-backed yourselves, but we had a lot of PE transactions getting done in 2021, 2022. So a natural cycle for these assets is a sort of 3 to 5 year hold period. So I wouldn't be surprised if we see, quite a number of assets coming to market this year. There's obviously a lot of European businesses at scale that took on PE funding a few years ago. CTAG, Captify, LoopMe, Bliss, MIQ. So I wouldn't be surprised if some of those deals come to market again this year. IPO, I mean, look, who knows? I saw over the weekend Mountain have apparently filed for an IPO, 100 million IPO. They're doing about 226 million in revenue. So, that'd be interesting to see because obviously there haven't been that many ad tech or generally tech IPOs for a while. That's an area we're kind of less focused on. We're more in the conversations around M&A, strategics and PE. But it's obviously a good sign for the market if companies think that there are scaled IPO opportunities returning.
And how do you feel with the likes of now you've got Netflix, the Disneys of this world getting into ad tech and programmatic? Do you think that plays a big factor in investing and M&As and maybe new entrants coming in looking for funding? Do you think, do these household names play a big role, even whether it's for new funds coming in and getting involved in ad tech as well? Sorry, I know that's a big question. I'd love to just kind of get your take on, how these big kind of household names are influencing the M&As and the investment in the industry.
Yeah, it's a really good point. And the short answer is, I hope so. And look, I think it's very interesting to see, obviously the kind of big, well-known streaming businesses all rolling out ad-supported tiers in the last few years. And then obviously the wider knock-on effect of that into the economy, broadly you could position it under the commerce media category, but Uber has surpassed a $1 billion advertising business. In the last 6 months, we've seen companies as varied as PayPal, United Airlines, a whole bunch of others, JP Morgan Media, Chase Media Solutions. So all of these non-traditional media companies are realizing that they're sitting on very large, engaged audiences, lots of rich first-party data. And although their core business is not monetization of those audiences through sort of data or ads, they've realized that they can follow the quote-unquote Amazon model, which obviously Walmart and a whole bunch of others now have done very successfully to roll out very high margin, profitable businesses. Another example that comes to mind is Instacart. When they went public a few years ago, I think about a third of their revenue, but nearly all of their profit was coming from ads rather than deliveries. So yes, I think, the more and more stories we see of this nature, hopefully that will put ad tech more on the radar of the wider investor community and also help them to see some of I was going to say less obvious opportunities, but help them see more opportunities beyond just the maybe traditional thinking of ad tech, that's an SSP or a DSP. There's obviously so many more kind of flavors to it. So yes, hopefully these larger kind of household name companies getting more into ad tech will help the generalist investor to kind of really lean in.
Yeah, that makes sense. And that follows up with my next question, which is, we've had like the year of mobile, the year of audio, the whole contextual push, right? A couple of years back, a lot of contextual companies came through, and now it would be interesting if we see the same amount since Google's announcement that they won't be dropping, the third-party cookie. We had our carbon footprint type companies, measuring carbon footprint with digital advertising. Do you see any, if you had a crystal ball, do you see any anything around a specific topic where you feel that new startups will be popping up? We obviously had Attention as well a few years back, popping up with the likes of Lumen and Adelaide and a few other companies. So yeah, is there any other kind of part of AdTech, like you mentioned, that you think we'll start to see more of?
I mean, look, AI is obviously the latest buzzword that has the potential to disrupt all sorts of industries. What I would say about that is I think actually ad tech or marketing is already pretty advanced in that category. You know, we've been using machine learning in terms of real-time bidding, real-time sort of optimization for a long, long time. And obviously that will continue to evolve quicker and quicker as more capability comes to market. But I would say versus, let's say, accounting, law, other various traditional industries, I don't think that the transformation will necessarily be as quick or as night and day, but given that we've already been on this sort of AI journey for quite a while within ad tech. Now, we are seeing some interesting companies that are disrupting previously quite manual workflow solutions around creative agency work, media buying, media planning. So I think, for agencies, there's a real question there because fundamentally a lot of them, make money by charging out people on a per day basis rather than sort of outcomes. So it'd be interesting to see how the agencies themselves deal with this kind of AI problem, because if they are able to do the work a lot more efficiently, arguably they're actually in the short term going to potentially lose revenue because they are no longer billing out as many people to their client. So that's going to be interesting to see how the agency landscape evolves in that context. So look, I think most of the startups that we kind of come across are positioning themselves as AI companies these days, but we always actually try to cut through that. And 3 years ago we're a Web3 company, and it's really a case of getting to the bottom of what's the actual solution that you're building? Why is it better than the existing incumbents? Why are customers willing to pay for it? How are you going to scale? The usual questions. So we try not to get too hung up on the latest sort of buzzword or latest sort of hot trend. And then I think, within that, we're also interested in often more picks and shovels types businesses, the kind of enabling tech. So actually a lot of the companies we're investing in and evaluating are what we would call signal vendors that are ultimately going to have access to a lot of proprietary data that then feeds these models. Because ultimately, the AI is only as good as the input, which is the data. And so we feel that, companies that are able to collect and sort of optimize towards unique data sets are going to be well positioned. So that's certainly an area that, we're investing in. And I think, we'll see more and more companies leaning into what we're describing as super signal aggregators. So the likes of Double Verify, IAS, TransUnion, Experian, even Scope 3, I think soon, are going to start to buy more and more of these sort of signal vendors to add capability to kind of have an impressive overall AI stack.
Interesting. And how important do you feel global economics plays? We hear noises of recessions, we hear noises of, the politics is always in the news, right? And how important do you think that is in whether it's companies being formed and getting investment? And do you feel that some markets in the last year, for example, have brought out more startups in the ad tech space?
Yeah, it definitely has an impact. Fundraising across the board has obviously been a lot tougher the last 2 or 3 years. In 2021, everyone, individuals and corporates were kind of running at all-time highs, and it was a lot easier to make more speculative investments. Obviously, that's been a lot tougher the last few years. But I think, we are seeing hopefully, signs of recovery in terms of M&A activity, interest rates stabilizing or maybe coming down a little bit. And, for us, when we go out and pitch to larger prospective investors, the lower their interest rates, the better for us, because it would make it more likely that they're looking for risk on versus, being able to earn 5 or 6% risk free in the bank. So yes, of course, it does have a big impact. But I guess, to be honest with you, these things are so far outside of our control that we don't actually spend too much time talking about it, because there's nothing ultimately that we can really do to shift the needle on those macro things. So I suppose we just have to execute as well as we can on, backing the right founders and helping them to succeed. But yes, for them as well, not just the fundraising, but obviously customer conversations, ad spend, etc. Whether that's been, SaaS kind of consolidation of people cutting SaaS subscriptions over the last few years, or advertisers and agencies been less willing to kind of experiment with new solutions. Of course, we all feel the impact of that. We don't live in sort of isolation from the global economy, and to an extent, advertising or marketing spend obviously does track the global economy. So it's obviously still a huge market, but it hasn't been plain sailing the last couple of years.
And the reason I mentioned it was we had obviously a large portion of AdTech historically coming out of UK, US in the past. We had the hero of Israel AdTech, which is obviously a lot of them still around from Israel. You also had Eastern Europe. You then, I think in the last few years, a lot of Indian AdTech companies have been flourishing. Like I was only there last year at the AdTech event in Delhi, and you can just see, all the newbies that are coming in and the use of AI and a lot of technologies. So do you feel like there are specific countries, playing a key, kind of important role over the next 5 years, or do you still feel it's going to be, the usuals in the US and the UK to the biggest markets that are out there?
Great to hear that India is flourishing. It's not. I've not been to India. We have evaluated a couple of Indian startups, although we haven't yet invested there. Certainly open to it. And look, to be honest with you, one of the reasons why we wanted to start FirstParty 4 years ago was to try and bring more capital and, I guess, experience to the non-US markets. In New York, there's always been a very thriving angel investor community, often the same people kind of investing in each other's companies and doing very well. Silicon Valley, obviously, in San Francisco. So, there's always been a lot of capital in the US. And really, we're trying and are trying to bring more capital to the rest of the world. And so far, most of our investments have been UK and Northern Europe, but we're certainly open to investing globally. One of the interesting markets at the moment is probably France. There seems to be a lot of interesting stuff coming out of there. And obviously, Criteo and a bunch of other companies have done well, which then spawns this sort of alumni or kind of Criteo mafia, if you like. And then, Augury, Mobcoy, Agilike, as all of these companies have been sort of acquired, the founders or early employees are starting new businesses. So, definitely seeing some interesting things coming out of France at the moment. And partly through Kieran's other company, ExchangeWire, we do get access to APAC. So we typically attend ATS Singapore and ATS Tokyo. So we'll definitely be in market for both of those events this year and open to conversations with entrepreneurs. So I think, look, conversely, I was in San Francisco last week for Ramp Up. And yes, there is obviously a lot of entrepreneurial activity there. So I think there will continue to be obviously that as the driving force market, but where we're looking is typically outside the US.
Makes sense. And for those of our listeners that are interested in getting involved and investing in AdTech and specifically FirstParty Capital, what's your advice for them and what you think they'll be getting in that kind of value exchange?
Yeah, so obviously, love to speak with anybody that's interested in finding out more. There's a few ways outside of us as well. If you're not already, there's great podcasts like this. There's ours. There's Marketecture. Start kind of, I guess, educating yourself a bit on kind of startup funding. Potentially join your local angel investment syndicate, and that doesn't necessarily have to be within AdTech, because there's obviously a lot of general kind of early stage investing rules that will apply. But there's usually, depending on where you are, there's going to be a bunch of interesting kind of business angel networks that you can join to start to evaluate investment opportunities. I think that's a good place to start. Potentially start to make some small investments. And then with regards to FirstParty, we operate the actual venture capital and kind of deal by deal approach in parallel. So we have the main fund where people could get access to a portfolio of currently 17 businesses with a single investment. We'll soon be launching our second fund as well, which is exciting. So that'll be another sort of 15 to 20 companies that we're investing in over the next 3 or 4 years. And so that'll be open for investors soon. And then there's also the deal by deal approach, as I mentioned, where people can actually choose specific companies. And we usually bring roughly one deal per quarter to the market.
Amazing. We always finish off our podcast episodes with this question. So I'd love to get your take on it. If you had a superpower in AdTech, what would it be?
Yeah, that's a tough one. And I couldn't come up with a good answer personally, other than maybe having quite a high risk tolerance. But I wouldn't say that's a sort of superpower necessarily. But I think at a company level, having this kind of network of 240 investors globally, we definitely actually, and a superpower is exactly the word we use often internally or in pitches to potential investors, because it really does allow us to punch above our weight, not just in terms of, attracting deal flow, doing due diligence, but also once we invest, so many potential customers and so champions, brand ambassadors in market that, we really feel that we can, have a meaningful impact, helping these companies. So I'd say, the kind of network that we have is our superpower. As you know, the industry is still so relationship driven as well. So it really helps to have so many people in market that are able to support our businesses.
Amazing answer. Thanks for that. So I think that's all we have time for in today's episode. Thanks, Rich, for your time. It's been great speaking to you.
Thanks a lot, Bal. It's been my pleasure.